Good morning, everyone. Sunday, June 28th, and this is your daily financial news. You probably know the deal by now. We're looking for 100 thumbs up each and every one of these daily videos, and then we will go ahead and do another Saturday live stream where we just answer your questions. We've done these 3 or 4 weeks in a row now, and it seems like you all like them. They run about an hour, and of course, they rely on your questions. So, if you have some questions you would like to ask, just leave them in the comments section below, and we will go ahead and address those on Saturdays. All right. So I think we should start this video off like I do usually on Sunday, and that's about painting the picture of the week ahead, right? What are those kind of reports that could impact my feel of the consumer? What could impact cost of capital? Again, that's what I look for. That's what I'm trying to understand. So first and foremost, Monday, right? This is a real estate channel. So Monday is pending home sales. Again, if this is probably going to surprise to the upside. Again, it's a supply demand imbalance. Realize that pending home sales are not closed transactions, as we learned from KB Homes last week. We've seen mortgage apps be impressive, but again, a mortgage app is not a mortgage approval. So we are going to start to see, we need to see follow-on data, right? So Monday is going to be interesting, pending home sales. They usually break it down by region, so we're going to start to see those regional impacts. We're going to see if the Northeast and California kind of come back, which at least in California, I think it will. My gut tells me New York as well, but again, don't really know New York, just looking at it from afar. Also, there's a Fed discussion. I forget which one of them, but anytime a Fed gets somebody from the Federal Reserve talks, one of their presidents, we should pay attention. I think it was from New York, but I could be wrong. But again, that's another talking point Monday afternoon. Again, you never know. Usually they're boring, but every once in a while they come out with something that's market moving. Also realize that next week's a short week, right? We have 4 trading days. Typically speaking, the professionals take the week off, right? They're off at their Hamptons beach house or wherever they go, where all those rich people go. But I'm not sure that this week will be that, but we'll see. I mean, it could be a light week, but I just don't think it's going to be. It's going to be a interesting week. We're going to see if we follow on from last Friday or not, and I just don't know. Tuesday is all about consumer confidence. Again, that's what this channel really is trying to figure out. Where is the consumer on the fear versus greed angle, right? Where are they, right? Are they opening their checkbook now or not? So Tuesday will be a big day. We actually got the president of the Fed, Powell, and Mnuchin, Treasury, talking Tuesday. It's going to be interesting to see what they talk about. I think the Fed is clearly on board with saying, guys, we're doing everything we can here at the Fed. Why doesn't everybody else kind of pitch in? So it'll be interesting to see if they talk about another stimulus plan. That's something I'll be looking for on Tuesday. Wednesday, we get our first shot at June employment data. ADP always comes out a day early. So ADP's monthly report is going to be interesting. It's one of those reports that historically is hot and cold. I think we've talked about that last month. Sometimes it's bang on right, and sometimes it gives us a head fake. But again, it's the first data on June, so it will be interesting. Also, we have FMOC, Fed Open Market Committee minutes. We're going to kind of figure out how nervous, how scared the Fed is, right? So that will be interesting because it will paint the vision of what they see in the future. Thursday is the big day. Thursday will be an interesting trading day. I'm going to guess a lot of people. I don't know. Thursday's going to be wild, I think. We have the normal initial jobless claims, which we've talked about every Thursday for 14 weeks, have been over a million, over 7 figures, a million new claims. But we do have the big employment report. That's the big number for the whole week, Thursday. It's about 8:30, I think. It'll be interesting because we're going to see does June follow on with May's surprise. If you remember May, it was a $10 million surprise to the good side. So right now, the median estimate is for 3 million jobs added, right? So net positive 3 million after May of 2.5. So we're building momentum. There is a estimate that the unemployment rate goes from 13.3 to 12.2, again heading in the right direction. So we will see. I did notice that there's one high estimate of 7 million jobs added and a unemployment of 11.1. That would be a bang up month. I think we all should hope for that, frankly. So we will see. But at the end of the day, Tuesday is the end of the first half, right? The first two quarters are over Tuesday. I'd be curious to see what you've done on your yearly goals, right? It seems like a decade ago that it was January 1st and we were talking about what do we want to accomplish this year. I share with you every Sunday, and you will see it later today, my goals and how we're tracking weekly. But it's the second half now. What are you going to be doing, right? If you're interested in real estate and real estate investing, I strongly suggest you learn your market. This is a dangerous time with such low supply. We got owner occupants, frankly, overpaying. It's tough to be an investor today. So if you're new, you should really be learning your market. Don't be in a rush. Don't pull the trigger just because you feel like you have to. You really should be learning your market today. So I don't do this a lot on the financial news videos, but you should take the course, link in the description below. Or if money is a problem, do the free 75-day challenge so you can learn your market, right? Understand what a bad, average, good, and great deal are. So that's the week ahead. Looks like this social media ban on, or not, looks like advertisers deciding not to advertise on social media for July is picking up speed. We talked about Coke on Friday. Now there's one of the largest liquor dispensers, Diego. Never heard of them, but they're the makers of Guinness is one of their brands. They are pulling out of all social media advertising. As I'm starting to talk about, I think social media I think social media is, big capital letters, is a cause for a lot of our frustration, scared, hate. We are isolated. We're not, it's not like when I was a teenager where I'd go get a ball and play outside with my 5 neighborhood friends, right? Now we're on social media, banging around, looking at this and that. And some of us are going down really dark places. And it just wouldn't happen if social media is there. So I do think that this social media ban, I think we're going to see some more announcements Monday and Tuesday, which will finish up June. And it will be interesting to see how that plays out. I don't think social media is the rainbows and unicorns that we all thought it was maybe a decade ago. Nursing homes, man, talk about a great disappointment. I don't know about you, but nationally, I am very disappointed with what we see going on in our nursing homes, right? You and I have been in lockdown for nearly 100 days. And the few times that I go out, I can see plexiglass at the bank. When I go sign a wire to buy a house, there's plexiglass and they have 6 foot of this and that. And, you can't go to you have to do drive through. You can't go to a fast food. I mean, businesses have changed in the 100 days, but yet nursing homes, our most vulnerable, are still suffering more than they should, right? What's happening in Arizona and New York and in other places? What the heck? Yeah, we need, I don't know, maybe some national standards or something. But our most vulnerable have not been, in my opinion, right? One guy's opinion, have not been taken care of to the level they should have. And frankly, it's been 100 days. We should have seen some better standards, but we are not. Next up, I have a prediction about a company that's going to become a favorite of the day traders. As you know, Hertz probably still is one of the top stocks, bouncing around. I think Friday it was an up day. But I think American Airlines. I think American Airlines breaks below $10, so it becomes a single-digit stock. And my guess is American Airlines becomes one of those yo-yo stocks that the day traders play with every day. David Portnoy or whatever his name is. I'm guessing it's going to become one of those momentum stocks that breaks from reality. And again, if I was American Airlines, I would get ready to issue stock into this because you have so much debt. You're the you're the airline that Boeing talked about 3 months ago that one of them could go bankrupt. You have so much debt, American. Stop it. Issue shares into the momentum. Right? Take advantage of that. Next up, Under Armour. I don't know if you're following this story. This story is not the needle mover. It's what this means, I think. Under Armour is looking to cancel a 15-year agreement with UCLA for that is $280 million. So it is interesting. And I have a question here that I forgot to answer yesterday. Do I have any interest in that triplex that I said I listed? I think it was last week, maybe 2 weeks ago, 10 days ago. I don't know, whenever. Overpriced. No activity, overpriced. If you remember, I listed it about 10% over what it was worth. We lowered it 10%, and we are getting calls on it almost immediately. So the market's not so crazy that people are overpaying, but we dropped the price to full market value, and we have many people looking at it. So there you go. Back to Under Armour, right? Canceling the UCLA agreement. What I would be nervous on is all of the sponsorship, right? I think if you saw anything in Nike's earnings, which were again surprisingly weak on Friday, all the other retailers in the sports industry, like Under Armour, probably are looking at their roster and saying, who can we cancel? Because they signed some big agreements and they are sucking wind right now. These agreements could probably bankrupt them because they're still paying, right? And I would expect a lot of athletes to have less endorsements, I guess they're called. And I expect companies like Under Armour, who are going to struggle until the economy opens up, to do a lot of canceled deals. So it will be interesting. Saw a cool story about a brand I've never heard of. Habits 365. Apparently it was started in high school by two friends. And now the brand is doing over 7 figures a year. Again, Habits 365. I'm going to look it up later in the day. I caught it as one of those good stories. I want to put out good news once in a while. So I thought that was pretty cool. Again, it's amazing what you can do in this economy when you are an entrepreneur. And this is what makes America great. You take some risks, you go for it. And, sometimes you win, sometimes you lose, but, you just get up, pick yourself up and move forward, right? So pretty cool. Looks like there's a lot of hope in the market. This is now the stock market, and I would say some for the real estate market. People are pointing to the huge record-breaking cash balances in savings and money market accounts. And they're saying that all of that dry powder is going to take us higher. Maybe. I don't think so. I think what you're seeing is fundamental change in the consumer. You also have to realize that a lot of that is PPP and other stimulus money that has by rule has to be put somewhere, like paying your employees. So I think you're being misguided when reporters talk about a balance like that with no context. And also I think saving has become the new thing, right? I think one of the things that will come out of this crisis, like the Depression, is we will have larger emergency funds. We will save more. We will do less obnoxious spending. So we will see. And then the last thing is the big banks, right? I told you Thursday that stress test results was a problem. It did not nearly go as well as we should have all hoped. Now it's been a couple of days and all the quote smart folks are looking at the big 6 banks and identifying Wells Fargo as the weakest. And more specifically because, the stress test clearly pointed out that some of the banks need to cancel or at least reduce their dividends. So people are trying to figure out which one, and Wells Fargo seems to be the clear winner/loser. Does that make sense? So that will obviously have an impact on their stock and all of those other things if it is true, right? The Fed is good about not declaring one so they don't have bank runs, but that doesn't stop the experts from trying to guess. So we're going to have to watch Wells Fargo for the next couple of weeks to see what happens. And in the end, Just want to let you know about what's coming today from me. You will probably see another live stream shortly about Section 8. I got a question from a subscriber about the Section 8 program and their 1 year anniversaries come up, what they can expect. So I will run through his questions. I will, of course, do my goals update video, which I do every Sunday. It just shows you how serious I am about moving this forward and how I track my business. And then I have an exciting kind of interview at 3 o'clock, which will be a big surprise. And then again, yes, Andrew, thank you. Don't forget to smash that thumbs up because we need 100 thumbs up, or I won't talk to you on Saturday, unfortunately. And then lastly, I put together a presentation for all those multifamily folks out there who just still think that multifamily is going to come out of this unscathed. I've done a quick kind of walkthrough of a 100-unit apartment building that produces 1,000 rent. I just wanted to be easy. And I wanted to show you what happens to value if expenses go up, if cap rates go up, if rent goes down, and just ripple through and show you how impactful values could be really crushed. And that's why, again, I think for the next 2 or 3 years, easy, the single family home is what you want to buy. I think multifamily is going to be in pain for 3 or 4 years as debt gets to refi and suddenly the value's not there. But we will see. So lots of videos coming today. Again, remember, we need 100 thumbs up on these daily videos. And of course, if you have questions, leave questions below, and we will talk to you tomorrow on the Daily Financial News. Take care.